Something strange has been happening in the silver market, and most people haven't noticed it yet. Prices move up and down every day. That's normal. But sometimes the behavior of a market tells a much deeper story. Over the last few years, silver has started acting differently than it used to. Not louder, not more dramatic, but quieter, tighter, and more controlled. And whenever a market becomes quiet in this way, it usually means something important is happening behind the scenes. Today's video is not about hype, predictions, or price targets. This is about understanding behavior. Because markets always speak, just not in headlines. Silver is one of the most important industrial metals in the world. It is used in electronics, solar panels, medical equipment, defense systems, and modern energy infrastructure. At the same time, it has also been treated as a monetary metal for thousands of years. That makes silver unique. It sits at the intersection of industry and money. And when pressure builds in both of those areas at the same time, the results can be unpredictable. Many investors still look at silver as a small, forgotten market. But governments, institutions, and manufacturers don't see it that way. They look at supply chains, strategic reserves, and long-term availability. And when you step back and observe what they are doing instead of what they are saying, a very different picture starts to form. The question is not whether silver is important. The real question is why the conversation around silver has become so quiet, even as global demand keeps rising. To understand why silver's behavior has changed, you have to look beyond daily prices and headlines. Silver is not just traded by investors, it is consumed. Once it is used in electronics, solar panels, or medical equipment, much of it is gone permanently. Unlike gold, most silver is not sitting in vaults waiting to be sold back into the market. This makes supply far more sensitive than many people realize. Over the past decade, global demand for silver has steadily increased, driven by technology and energy transitions. At the same time, new mine supply has struggled to keep up. Grades are declining, production costs are rising, and fewer large discoveries are being made. These pressures don't always show up immediately in price, but they show up in structure. When a market tightens quietly, it often means inventory is being managed carefully. Large buyers don't rush in loudly. They spread purchases over time, avoid drawing attention, and secure long-term access instead of chasing short-term price moves. This is where the silence around silver becomes interesting. When markets are truly unimportant, they are ignored completely. But silver is not being ignored. It is being handled cautiously. Governments think in terms of resilience, not quarterly returns. Manufacturers think in terms of guaranteed supply, not speculation. Institutions focus on stability and availability, not headlines. That kind of demand doesn't create excitement, but it creates pressure. And pressure that builds quietly can lead to sharp adjustments when conditions change. This video is not suggesting a specific outcome or timeline. It is about awareness. When a market that connects industry, energy, technology, and money starts behaving differently, it deserves attention. Silver may look calm on the surface, but calm markets often carry the most information. The key is not to ask what silver will do tomorrow, but to understand why the people who depend on it are acting the way they are today.